Hey, good morning, everybody. Going to go over our Forex trades for today, Thursday, October 8th. A little early today as there was a bunch of news we had to kind of avoid this morning. We did have two trades, which were triggered last night and actually got liquidated while we were sleeping. Picked up 5.0 pips on a size-adjusted basis. A non-size adjusted basis is 50.6 pips. We had 10% of each, small, much smaller than normal, and reason being, we had Bank of England coming out with their interest rate decision at 7 o'clock this morning, so we didn't know. We put those positions on. We didn't get in them until rather late last night, so we didn't know what would be happening. We might be holding them, into that meeting. So therefore, we took small. And on top of that, at 7:30 this morning on the East Coast, we had Eurozone meeting minutes being released. So let's go over some of that real quick. Bank of England, they left interest rates unchanged, which everyone figured as much. Excuse me. They see inflation staying below 1% until the spring of 2016. They said rate path over the next few years will depend on economic circumstances. ECB says cyclical recovery is taking a hold. Mario Draghi from the ECB said it was premature to judge impact of economic risks. And it says ECB to the front load QE to prepare for lower December liquidity. So we finally have a central banker admitting to QE affecting liquidity and affecting it to the lower side, which we've talked about in the past. Bond traders that we know, they've been complaining for years now, a couple of years now, that liquidity is low, and this is not even the Fed. This is the ECB, but I'm pointing towards the Fed. The Fed owns over 30% of United States Treasuries, just under 31%. That was as of a couple months ago. So look, it has to impact liquidity because they're not out there selling it either, right? They're only really mainly buyers of it. So, or they were until supposedly QE ended. That's a whole nother conversation. They said QE issue limit raised to preempt any bound bottlenecks. That's what the ECB said. So here they are. They're saying that they've taken the QE limit that they do every month and they've raised it. I don't believe they said what they raised it to unless we missed it. ECB Governing Council wanted more time to understand volatility. Okay. ECB had broad agreement that downside inflation risks rose, deflation risk receding for greater part of Euro area. That is debatable, considering Germany announced just a week or so ago deflationary numbers for something. So here the ECB's been spending all these billions of dollars or hundreds of billions of dollars already by now. On the way to $1 trillion, and they're really not creating much inflation at all, and they're insisting that their economy is getting better, just as the Fed does here. It's no different. They seem to all be on the same page, and they all seem to be getting the same lackluster results. ECB minutes, it saw a substantial degree of stimulus still in the pipeline. It saw liquidity only very slowly feeding economic activity. All right, so here they are. It says only very slowly feeding economic activity from the stimulus. So they backtrack all the time. They try to CYA, right? Cover your own what. I don't know if it really works all the time. I guess it works for the people that are not really paying attention to it. But when you dive into it, you start to read this stuff as we do. It's evident that they try to cover their backside as much as they can because they know inside their hearts, they know this QE has not worked the way they thought, and they also know this QE was a financial experiment. There's a lot of data here. ECB members stressed importance of underlying inflation gauges. Yes, and we know that. ECB lower liquidity had become more apparent in some market segments. Finally, a central bank acknowledged it, right? So that's what we touched on before. So that was all from the ECB. Bernanke was on Bloomberg being interviewed this morning, and of course Bloomberg is trying to hype him up, saying how great QE was and everything. And it's the same old song and dance, really. But one of the biggest points we took out of it, he said, biggest impact of QE was to create jobs. Of course, the Bloomberg talking heads didn't follow up on that. They didn't say, well, what do you mean was? We know that QE didn't create jobs. So he is kind of tempting the press, by using the word was. And the press, of course, it's also a slap in the face, because then the mainstream media, they don't ask. They don't follow up with it. They just kind of brush it over, and they just continue on their interview. It's just something we wanted to bring out today on that. GDP now model from the Atlanta Fed. They actually raised this week. They raised their third quarter 2015 GDP up from 0.9 to up 1.1%. Really shocked at that, considering last Friday was the non-farm payroll number, which was so bad. I was expecting it to either remain flat or actually be adjusted down, but for some reason their computer models bumped it up 0.2%. What else? Initial jobless claims came out slightly better than expected. One of the other things, HSBC, they came out this morning, and their biggest question for the day is if the U.S. is turning to, it says, is the U.S. turning into Europe, or is it turning into Japan, as it cuts its 10-year forecast from 2.8 to 1.5%. So they were estimating a 10-year treasury of 2.8%. 10-year treasury's been floating around 2%. It actually, after the non-farm payroll last Friday, dipped to 1.92%. I believe Friday closed 1.99%. Last time I looked, yesterday or 2 days ago, it was just a little over 2%, like 2.03%. They were estimating 2.8%, and they just cut it to 1.5. Now, if you follow this before, Japan has been doing QE or some type of economic stimulus for 10 years, and they're having very little growth in their economy and really no inflation, at least the way inflation's calculated by governments these days. So here we are, and now here's HSBC, a huge international bank, asking, is the U.S. turning into Europe or Japan? So I guess they're kind of hinting that maybe Europe is doing better than America, but that's absolutely not the case. Europe is worse than the United States. The United States and China were the two economies that had some. I mean, China had a huge bright spotlight on it, right? It was doing very well. The United States was coming back a little bit and kind of holding its own, while Japan was still very weak, and Europe was sliding down that slope of weakness. Well, we're sliding down that slope of weakness with Europe, and China has already they're sliding down faster on that slope of weakness than Europe and the United States. So the whole global economy is extremely weak. But we'll be saying it for a long time. Anyway, so let's go over the two trades. As I said before, two trades, 5.0 pips on a size adjusted basis. We had 10% of the normal size because of all the economic data. Not only that, we also had the Fed's Bullard was speaking at 9:30, but he wasn't. He decided not to make any comments on the economy. Then we have another Fed governor, I don't remember his last name, at 1 o'clock. At 3:30, we have the Fed's Williams. I believe that is a speech on the economy. And then at 2 p.m., this is all Eastern Standard Time, on 2 p.m., we have the FOMC minutes, which is a huge data point, just as the Euro minutes was a big data point. So obviously we were going to want to trade everything on the conservative side, and we'll just go from there. So let's go over to two trades. First one you're looking at here is pound yen. We were long this from 183.694 last night. You can see we got in around 10 o'clock or so, maybe even 10:30ish. We had our stops, I believe, down in this area. You can see it has an approach that's still not there if you're still in this thing, by the way, but we're not. since we weren't watching it, we just lowered we couldn't peace out, obviously, because it happens while you're sleeping. And we lowered our profit target to 183.930, which is actually the actual price that we got out, picking up 23.6 pips, which again is just ahead of the figure of 184. You know our feelings on the figures. It's a big psychological number. If we were in front of the computer, we probably would have pieced it out. You know, we probably would have pieced some out around 80, 183.80, and then some more around this number here, and see if we could get through this. And it obviously it did. It spiked up to 184.10, 184.12. So we probably would have got out another piece somewhere, 184.08, maybe 09, maybe even 10, and then held the last piece, which would have got stopped out at break even. But probably all said and done, even if we did all that work, we probably would have came out about the same, just because it had this big reversal again from the interest rate decision by the UK and also the ECB meeting minutes. So it worked out just to get out of it all, as it turned out. But you know, if the ECB minutes and the Bank of England's interest rate decision was a little different story, this thing may have kept going. Then we would have been crying the blues, right? So not crying the blues, we still made money, but we wouldn't have made as much money. But we'll take it. Euro Canadian dollar, we were long this 1.47035. We actually got long this. Was it a little after? I think it was a little after pound yen, maybe half an hour, 45 minutes later. Again, our stop was, I believe our stop was down here in this vicinity. No, it wasn't that low. Sorry. I believe it was down here in this vicinity. You can see it didn't approach it. Actually, it still hasn't really. I mean, it got maybe a little close on the spike down during all that news this morning. But we put our profit. Originally, we were looking for this level here, 147.50, between 1.4750 and 1.48, you know, the figure. But since we weren't going to be in front of the computers again because we were sleeping, we decided just to put it all out there. And instead of trying to put it too close to that 1.4750, we just put it out here at 1.4730. We actually got filled 1.47305, a little bit better than expected because of the move here. Must have been pretty strong. Picking up 27 pips or 2.7 on a size adjusted basis. This one would have worked out better for us if we were, you know, awake and piecing it out, because we would have looked to piece out some, probably around the 1.4720 level, which probably would have been up in this area here, and then could have pieced out more around 30, and most likely more around the 1.4750 level, which would have worked out nicely. You can see it spiked through it to 1.4758, and then we would have the last piece at break even, which, you know, stop at break even on the last piece, which it would have stopped us out break even again because of all the news this morning. All said and done, probably would have done about the same as well, you know, as on pound yen. But you know, that news could have been complete opposite and could have run. So, but like I said, since you're not in front of the computer, you have to be, you know, a little conservative and just take it. And again, you know, maybe we should have moved it up around 1.4740, 1.4742, 43, maybe even 45. But, you know, that might have been a little greedy, because what if it stalled out? Well, you know, what if we were 1.4745 and she ran to 1.4740 and stalled out and then started to reverse? You come in the office this morning and it's, you know, all the way down here. Now you're just about up on a thing. So, and we only had 10% of our normal size. So I think we did the right thing personally. All right, so that's it. Let's wrap it up. If any signals come out, they'll be coming your way. If you're still trading now, good luck. If we get some action tonight and tomorrow, we will do a video tomorrow as well. Have a great rest of your day.